Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. All right, let's get straight into it. We're cutting through the noise today, looking at a stack of really crucial press releases. Our focus, it's laser sharp. Concrete financial results, major production milestones, those high-grade drill hits, the stuff that, really matters to investors.
Exactly. We're not just skimming headlines. We're digging into the economic context, the operational shifts. What we're seeing today is this pivotal moment for several companies.
A transition, really.
Yes, a transition from, let's say, promise to proof, from R&D risk or pure exploration into something much more tangible, something validated. We've got updates spanning next-gen batteries, huge copper economics, and some seriously impressive gold and silver results.
We're definitely looking for those nuggets of hard data that demand attention.
Verifiable proof points, that's the goal.
Okay, let's start with that electrification push, the battery space. We've got a big headline from HPQ Silicon.
That's HPQ Silicon Inc. Tickers are TSXV, HPQ, and over on the OTCQB, HPQFF.
And the headline reads, HPQ Silicon Inc. receives first industrial shipments of batteries. Now, this feels significant. It's not just lab work anymore.
It's a huge step. They've basically moved from the bench into the real world, receiving actual industrial batches of their lithium-ion cells.
And these are the standard formats, right? The 18650s and the 21700s.
The very ones. The workhorses. This isn't just a sample run. It's manufactured on commercial-level kit by their partner, Novacium.
So what does this shipment actually mean for the company and for, people watching them?
It fundamentally de-risks the technology in the market's eyes. It shows it's not just a lab curiosity. These cells, made on industrial lines, are now heading out for that crucial third-party field testing.
In key sectors, I see mobility, energy storage, defense, high-stakes applications.
Precisely. This is that bridge everyone waits for. The CEO, Bernard Tourillon, he nailed it when he called this the bridge between development and market validation.
Makes sense. But, okay, playing devil's advocate for a second. Is there a risk they move to industrial scale maybe a bit too fast, before the chemistry is totally locked down?
That's always a calculated risk in this space, moving from R&D to production. But look, testing the process at scale is just as important as testing the product itself. You need to know if it works under real manufacturing pressures.
And the scale itself is notable.
It is. Novacium's facility in France, they're talking capacity for the equivalent of 1.5 million cells a year. That tells you HPQ isn't just thinking about materials anymore. They're positioning themselves as a potential supplier of finished cells. Building that domestic supply chain capability, that's a massive talking point right now.
Got it. Okay, so from battery components, let's shift gears to the raw materials underpinning, well, everything electrical. Big copper news out of South America. Aldebaran Resources.
Aldebaran Resources, Inc., tickers TSXV, ALDE, and OTCQX, ADBRF. And yeah, given the looming copper deficits everyone's talking about, a release like this, it definitely turns heads.
The headline is pretty stark. Aldebaran's Alter Project PEA outlines a 48-year copper gold mine with a $2 billion NPV and 20.5% IRR. Let's break down those PEA numbers. That's the preliminary economic assessment, the first big financial look.
And these are world-class numbers, make no mistake. Post-tax net present value, the NPV, basically what the project's worth in today's money. They're pegging it at $2.0 billion, using an 8% discount rate, which is standard.
$2 billion. And the IRR?
The internal rate of return, measuring profitability, comes in at 20.5%. Very healthy.
And that mine life, 48 years. That's almost half a century of production. That's generational.
It's exactly the kind of scale the major players are hunting for in copper right now. True Tier 1 potential. And look at the costs.
Right. Costs are key. What are they projecting?
Their cash costs, the C1 costs, over the first 20 years are projected at $1.71 per pound of copper. That's highly competitive.
How competitive? Like, where does that put them globally?
Puts them comfortably in the lowest quartile. Many big mines operate well north of $2 a pound. So $1.71 suggests really strong margins, resilience, even if copper prices dip.
Okay. Strong economics, long life, low costs. What's the catch? The upfront cost, the CapEx.
Yeah, the initial CapEx is estimated at $1.59 billion. That's obviously a significant number for a junior.
Absolutely. Financing that is the challenge.
It is. But that's where the project's underlying value, that $2 billion MPV, comes into play. It signals the potential returns needed to attract that kind of major investment.
And think about the leverage to metal prices.
You mean the upside if copper stays high?
Exactly. Those headline numbers use conservative long-term prices. If you run the PEA using current spot prices around $5 copper, nearly $4,000 gold, that NPV balloons to $3.34 billion, and the IRR jumps to 28%, that's serious optionality. That's what gets major financing discussions moving.
And they're looking at potentially improving things further with technology. Right, they're evaluating Rio Tinto's Newton technology. It's a leaching process that could potentially lower CapEx even more, cut operating costs, and boost the project's environmental credentials, all of which just makes Alter look even more strategic in the global copper picture.
Okay, a massive copper story. Let's pivot now to precious metals. We've got two significant updates on gold drilling, indicating some major expansion potential. First, let's head to Newfoundland, Canada.
Newfound gold territory.
That's Newfound Gold Court, TSXV NFG, and also on the NYSE American, NFGC. The headline, Newfound Gold extends high-grade dropkick discovery at Queensway, signaling wider district potential.
Yeah, this is really exciting stuff coming out of Queensway. The dropkick zone keeps delivering these really high-grade, multi-meter intercepts. It's textbook exploration success, showing continuity.
What kind of grades are we talking about?
We're seeing hits like 29.2 grams per ton, gold over 9.25 meters. Think about that. And another one, 20.9 grams per ton over 11.10 meters. Also a broader zone, 4.55 grams per ton over a hefty 28.55 meters.
Okay, put those grades in context. Why is, say, 29 grams over 9 meters such a big deal?
Well, look, many large, successful open-pit gold mines today are running on maybe 1, sometimes 2 grams per ton. When you hit grades like 20 or nearly 30 grams per ton, especially over decent widths like 9 or 11 meters, that's just exceptional. It suggests a really potent high-grade system.
Underground potential, or boosting the overall grade?
Both, potentially.
Yeah.
It signals you might have these very high-value zones within a larger system. It speaks to the overall robustness of the gold mineralization there.
And the scale keeps growing.
It does. They're saying dropkick now stretches about 815 meters along strike, down to around 285 meters vertically, and crucially, it's still open in all directions.
Meaning there's likely more to find.
Exactly. The company president, Melissa Render, used the term camp potential. They're moving beyond just one discovery zone. They're proving up a whole district.
Okay, great update from Newfoundland. Now let's swing over to West Africa. Kobo Resources, trading as TSXV KRI.
All right, Kobo in Côte d'Ivoire. Headline here. Kobo Resources confirms broad gold mineralization at Côte d'Ivoire's Kossou project, strengthening growth potential. This sounds more about confirming the model.
Precisely. This is about systematic work, validating their geological understanding of the structures, particularly the contact zone fault, or CZ fault, and the results back it up.
What do they hit?
They're showing good, broad zones of mineralization. Things like 10.0 meters grading 2.50 grams per ton gold, and that included a sweeter spot of 6 meters at 3.77 grams per ton. They also hit 13.0 meters at 1.49 grams per ton gold.
Consistent, if not quite the spectacular grades of NFG.
Different style, perhaps, but still very significant. Plus, they tagged a nice high-grade shear near surface, too, 1.0 meter at 17.30 grams per ton gold. What's key here is the consistency.
Right. It shows the system is working as they thought.
Exactly. It confirms the structural model, suggests a robust, growing gold system is present, and does so in a jurisdiction, Côte d'Ivoire, that's well regarded for mining investment in West Africa. It builds confidence in the overall scale potential at Kossou. Makes sense. Okay, let's wrap things up with silver. We're heading to Mexico, to a historic mining area in the Sierra Madre. The company is Silverco Mining.
Silverco Mining Ltd, symbol TSXV, SICO.
And their headline, Silverco Mining unveils high-grade silver discovery at Cusi project, validating new geological model in Mexico's Sierra Madre. Validating new models seems key here.
It absolutely is. This is a story about applying fresh thinking to an old area. Cusi is a historic mine, and Silverco came in with a new interpretation of the geology. This concept of a down-thrown block, suggesting mineralization continued deeper than previously thought.
And the drilling proved them right.
Bingo. They hit some excellent high-grade silver equivalent, or AGQ. Remember, AGQ bundles the value of all payable metals into a silver context.
What were the grades?
At the San Miguel vein, they reported 7.5 meters, grading 364 grams per ton AGEQ. And over at the Edgewiges extension vein, 3.2 meters, grading 519 grams per ton AGQ. Those are really strong silver grades anywhere in the world.
Wow, especially finding that in an area people might have written off. But what's the bigger picture here for SICO?
The operational context is critical for you to understand. Cusi isn't just exploration ground. It has existing infrastructure. There's already a permitted 1,200-ton-per-day mill sitting right there on site.
So they don't need to build one from scratch.
Exactly. That saves enormous time and capital. These drill results, hitting high grades below the previously understood limits, they've essentially doubled the known depth potential of the mineralized system. They've shown the veins continue under faulted ground. This means they can potentially feed that existing mill with new, high-grade ore.
That sounds like a fast track to potential production.
That seems to be the plan. They're launching a 15,000-meter drill program for 2025. The goal is clearly to build out the resource inventory quickly and position Kuzi for potential mine restart, maybe as early as 2026. It's leveraging high-grade discovery with existing infrastructure, a smart strategy.
Okay, so let's tie this all together. What's the common thread across these diverse stories?
I think it's really about maturation and validation. You see HPQ moving from R&D promises to actual industrial product shipment, which is a huge validation step.
Right, de-risking.
Then you have Aldebaran taking a massive copper resource and putting hard multi-billion-dollar economics on it with that PEA, quantifying the asset value.
Turning geology into finance, basically.
Precisely. And then with the gold and silver plays Newfound, Kobo, Silverco. It's about demonstrating scale and high-grade continuity, proving these aren't just isolated hits, but potentially large economic systems.
So the takeaway for listeners is that these companies are moving beyond pure speculation.
Yes, they're transitioning towards providing measurable, tangible proof points. Whether it's silicon anodes being shipped, or NPV calculations for a copper giant, or consistent high-grade drill intercepts for gold and silver, these are concrete data points, things you can actually dig into and research further.
The market wants proof, and these companies in different ways seem to be delivering it.
That's the essence of it, crossing that threshold from maybe to here's the evidence.
Absolutely. Okay, so here's a final thought for you to chew on based on all this. We see this massive global push for electrification. Where's the most compelling risk-reward balance right now? Is it with a company like HPQ trying to disrupt the battery supply chain by successfully bridging that gap to produce next-gen materials? Or does the better bet lie with companies like Aldebaran, Newfound Gold, Silverco, those uncovering potentially generational supplies of the fundamental base and precious metals, the finite resources the world absolutely needs for that electrification? Where's the real value bottleneck? And maybe the biggest opportunity.
Something to think about.